Hope you are able to see the screen. See, what I was trying to tell you in the earlier class, that this is liability register. This is electronic liability register. See, we have seen electronic cash ledger, electronic credit ledger, tax liability and ITC comparison statement. And now I am showing you electronic liability register. Okay. And here in electronic liability register, though the name says liability, it is the register which is maintained by the GST department. So what they are trying to do, whenever there is a liability, okay, whenever there is a liability, they are debiting this account. That means they are supposed to receive this money from the taxpayer. Okay. If you see in this first, 19th July date entry, 2,19,000 they have debited. Okay, that is IGST 2,19,000. There is no CGST, SGST. Okay, and now when you reverse charge, it is zero. It is liability is zero. Okay, debit is there, but amounts are zero. Fine. And how this 2,19,000 is discharged, if you see, through other than reverse charge, through ITC credit. You see credit they are saying. Sorry, cash. Through cash, 2,09,891 they have used, and through ITC they have paid 9,109. These two put together, it has become 2,19,000. That is the reason what I was trying to tell you. Never directly debit the liability when you are releasing payment through cash. It is always better to take it to a clearing account, where you will take the liability also to the clearing account, input credit to the clearing account. When you make payment to the cash ledger, the entry what I told was, in this example, IGST cash ledger account debit to bank account, which you are funding the cash ledger through your bank. Okay, then from cash ledger, you will take that money to clearing account. IGST clearing account debit to IGST cash ledger account. Okay. See, we give an example, I will show you what will be the entry. Are you able to see the entry? IGST clearing account debit 2,19,000. This was the liability which was declared in 3B. That is why department has debited the liability register. Why department has debited is this amount is receivable. See this naming the nomenclature of the accounts, though it says liability, it is not liability to the department. It is a liability to the taxpayer. Okay, so in order to understand from taxpayer perspective, they have mentioned it as liability. Okay, so when they are debiting, that means that money is to be received from the taxpayer, 2,19,000, and that 2,19,000 the taxpayer has paid by utilizing the credit of 9,109 and used cash ledger balance. Okay, so for this cash ledger balance, what should have been the entry before making this entry is, first, when the taxpayer has deposited the money, it would be IGST cash ledger account debit 2,09,891 to bank account 2,09,891. If he has made the payment of exactly what is required, if he has made more payment, then that amount will be there here, and whatever is used will be reduced, and closing balance of cash ledger will be difference of these two amounts. Okay, so your cash ledger, your credit ledger, and your liability ledger should match with your accounting entries. Now I will show you the accounting entries. In tally. Okay, I think hope you are able to see the tally. See, if you see here, March 2023, 72,000 IGST payable is outstanding, CGST 3,900,000 and SGST 3,900,000. Okay, if I go to liability register, what is the outstanding we will see? Okay, say 19th April, what is debited? You see this particular line item, there is a debit, 19th April, okay? In transaction column, transaction type debit, okay? Here I will highlight this if you are getting confused. You see here, this particular item. First, there is a debit, 72,000, 2,77,500 and SGST 2,77,500. But my ledger is showing 3,900,000, 3,900,000. That means this assessee has reported less amount in 3B, though his liability was 3,900,000. That will remain as reconciliation item. Okay. So you should always, and see, when you are finalizing the books of accounts for the balance sheet purpose, you should get confirmation that yes, all the entries are proper. Actually the liability for March should have been 3,900,000, but he has reported 2,77,500 only. See, because assessees will do, okay, this bill I may realize, I may not realize, all this funda, they will be doing it. But we are not bothered about it. We should ensure that our books of accounts are as per the applicable rules, okay, GST norms and all. Otherwise, if this particular assessee, taxpayer had reported properly, then like IGST, whatever is shown as 72,000, and this CGST and SGST should have been 3,900,000, 3,900,000. Of course, this assessee has paid that amount subsequently in next month return. Okay. So he missed it to report that particular GSTR1 in the GSTR1 return. Okay. So this is how you should try to match. Otherwise, this whatever outstanding is shown here, it will be reflecting here. Okay. This is how you have to report it. See, if you see in liability register, there is a huge liability. In input register, there is a huge input, but I am not setting off both. Why I am not setting off both? The reason being that the set off is done only at the next month, 19th April only we have done the set off. That is the reason I am not doing the set off here. Okay. Fine. Now we'll move to RCM entries, then we will conclude with GST. Okay. there are two kinds of RCM. One, there is a registered vendor where RCM is applicable. Another one, there is not a registered vendor, RCM is applicable, right? If registered vendor RCM is applicable, then entry will be like this. Both the cases entry will be same. Okay, say for car hire charges, for example. Car hire charges account debit, RCM, IGST, deferred credit account debit to vendor account to RCM, IGST payable account. Hope you are able to see the entry. Car hire charges account debit, RCM, IGST deferred credit account debit. Why I am saying deferred credit? The reason being, I am not going to enjoy this credit immediately. Suppose we are in the month of November. If I have incurred some expense with respect to RCM applicable expense, then this month I am not eligible to take the input credit. When I am eligible to take the input credit is next month I will on 20th December when I release this RCM payment. So in December month 3B, I will be able to take this input credit. So to differentiate from regular input credit, it is always better to have deferred credit. So deferred credit, next month, whatever deferred credit is there, that deferred credit will be eligible for taking input credit because you would have paid this money in 20th December. Then in December month, when you will be filing 3B on 20th January 2024, then this particular credit will be eligible to be taken. This is one aspect to it. Coming to second aspect, there is a time limit for making RCM liability. Okay, 60 days from the date of invoice or from the date of payment, whichever is earlier, right? So why you should pay this money immediately in the next month? What is the necessity? See, if you make the payment, then you will be eligible to take the credit. But why should you make the payment? When department is giving you time to make the payment, then you have to utilize that time. It will help in cash flow, right? Say in Tally, you have, when you are making the purchase entry, you have option, you have, they have given space for voucher date and invoice date. So in this case, where the invoice has been given by the service provider, I am giving the date of the invoice. Okay, I can enjoy this payment of RCM till the due date, which is 60 days from the date of the invoice. Okay, so I have time. Then that's why I told you in initial period also that there should be some backend report where you can generate this report from that particular software. Or see, I have seen in your YouTube channel even this Joho books they are giving. You should ask. I have not seen completely. So when they're teaching you, when they're explaining you, you should ask, can we generate any kind of report like this? It will be helpful to the taxpayer. Okay, so we can enjoy the time credit period for this RCM also. This is one aspect to it. Another one is coming to next is where it is a RCM is applicable where it is unregistered vendor. Okay, say suppose you have a entity has taken residential property on rent for commercial purpose. Their RCM is applicable, and the person whoever has given the property is individual and he is not a registered person and RCM is applicable there. Then you will pass similar entry like rent account debit, RCM account debit, RCM deferred credit account debit to owner account to RCM payable account, right? Here you have to generate invoice also because he is a unregistered vendor. So when you generate an invoice for unregistered vendor, your software should be equipped with output also. Then it is easy for you. Okay. In this case, in the previous example of car hire charges, there is no requirement of generating the invoice because it is from registered vendor. Okay. In case of rent example which I have taken, it is unregistered vendor and RCM is applicable. Then it is the responsibility of the taxpayer to generate invoice. So whenever you make this entry, there should be a invoice series which has to be generated, and it has to be printed and kept for our, taxpayer records. If you are an accountant, you should ensure that that invoice is coming and you are maintaining. If you are an auditor, you should check whether they are maintaining those invoices or not. Okay. With this, I am concluding GST portion. Now we will move to financials. If you have any doubts, please let me know. Okay. See, now if you remember, I have told we will discuss financial statements with respect to IGAP only, not Ind AS. So whatever I am talking now will be applicable for IGAP financials only, not Ind AS financials. Okay. Here I have divided into two aspects. One is companies and another one is non-corporate entities. Okay. So now, as see non-corporate entities, we need once we understand companies, then it is more easy for understand non-corporate entities. That is the reason first I have taken a financial statement for corporate entities. Okay. So when you say about financial statements, they immediately what will come for companies? We are talking about companies. So immediately comes the company applicability of Companies Act. See, when the entity is a corporate entity, then all company laws will apply, right? So these financial statements are mentioned in the format is mentioned in Schedule 3 to Companies Act. Okay. As per that Schedule 3, there are various statements which are to be prepared for completing the financials of the company. Okay, which you all know that balance sheet, statement of changes in equity, wherever it is applicable, they have given the criteria. In those cases only it is applicable. Statement of profit and loss, cash flow statements, notes and other statements. Okay, we will study the format in detail. Okay, now again coming to these formats, whatever is prescribed is other than specific companies where they are governed by specific act. Say for example, like insurance company, banking company, okay, generation and supply of electricity, with the company which is engaged in generation and supply of electricity, and any other company as prescribed. Suppose tomorrow, apart from insurance company, banking company and electricity company, if the government comes up saying that apart from this we are prescribing some other format for some other type of business, then those companies does not fall under this category. They have to be followed. They have to follow whatever the formats prescribed under these acts. Okay, they have to do that way. Fine. Now, if you see Schedule 3 to Companies Act, Schedule 3 to Companies Act, they have divided into 3 divisions. One is companies that are required to apply accounting standards under Section 133 of the Companies Act. This means that whatever whichever the companies for which accounting standards are applicable has to follow this particular division. Okay, that is division 1. See here, companies that are required to apply accounting standards. It is AS. I have not spelled fully. I have abbreviated it to AS. Accounting standards under section 133 of the Companies Act. Then if you see division 2, here what they are saying is, wherever Ind AS is applicable, then they have to follow this particular format, division 2. Fine. See, in division 1, the companies for which accounting standards are applicable has to follow this particular format in division 1 format, and in case of division 2, wherever Ind AS standards are applicable to those companies, they have to follow division 2 format. Okay, and coming to division 3, NBFCs, non-banking financial corporations. Okay, companies, non-banking financial companies that are required to apply Ind AS. It is not accounting standard, Ind AS, then they have to follow division 3. Okay, see here, if you see here, there is a banking company. Okay, but here it is NBFC. Okay, this is not a banking company, this is NBFC. So we are right now, as I told you, we are discussing about division 1 only. Division 2 we are not discussing, but wherever important things are there, I will highlight for you. Okay, understand? So we are talking about Schedule 3, Companies Act, Division 1, financial statements, format. See, now in all these 7-8 classes, whatever we have learned, we have made our data ready, okay, for putting those numbers in the format. Now we should understand the format so that I can put those numbers in the right place, right? Are you following me? Okay. So right now, whatever we have done is we have made our books of accounts ready to prepare the financials. Okay. Now we have to put those numbers in the financials. That is one. Another one is presentation. See, disclosure and presentation, again, it is governed by accounting standards. You see, why they have divided these 3 divisions, if you see carefully, here they are saying accounting standards. Here they are saying Indian accounting standards, Ind AS. Fine. That means something is told by accounting standard that in these kind of companies, you present and disclose the certain requirements wherever it is applicable in the format what is prescribed by the accounting standard. In case of division 2, in division 2, what they are saying, wherever these entities are liable to disclose in division 2 format, then you have to follow the Indian accounting standard, Ind AS standards, and you have to present it. Okay, so these formats are based upon the standards under which they are falling, right? In case of NBFCs, it is division 3. Understand? So it is very important for us. Okay, if you see among 29 accounting standards, subject to 2 they have removed, 29, 27 is applicable to all the companies as per MCA. Okay, so whatever is applicable accounting standards, then you have to put it in division 1 format. Okay, similarly, wherever Ind AS is applicable, okay, and their respective standards are applicable, then you will disclose the same in the format which is given in division 2. Okay. Now, before preparing the final accounts, what are the aspects we have to keep in mind? See, we have discussed that it is Schedule 3 to Companies Act requirements. So, in short while, soon we will understand the format of Schedule 3. Okay. Apart from format, just liabilities, assets, okay, income, other income, direct expense, indirect expense, depreciation. Apart this format, they have also given what are the notes to be mentioned, how it has to be mentioned. All these things they have given. So all those things we have to follow. Okay. And next coming to, we have discussed this accounting standards that are notified by MCA. Fine. So accounting standards that are notified by MCA, these are applicable for companies. Okay. And coming to other statutory requirements also. There may be other statutory requirements like say income tax. Okay. Income tax also says that you have to provide these details for us in the financial statements or while preparing the computation of total income, then you have to provide these details. Okay. Then you have to comply that also while preparing the financial statements. So they have given 10 ICDS. ICDS means Income Computation and Disclosure Standards. So, sir, you may ask me, sir, accounting standard 1 is there where it says what are the policies, accounting policies, disclosure, all these things. Of course, it is there, but income tax department has got their own rules, like we have depreciation as per Companies Act and depreciation as per Income Tax Act. Okay. So the same way, like how we give, we prepare a schedule of fixed assets for Companies Act separately and for Income Tax Act separately. Same way they have given wherever there is a gap between the standards and their income tax rules, they have given the standards for income computation and disclosure also. So there you have to comply this also. Say for example, now you see construction contracts. Construction contracts, here ICDS 3 it is there. Construction total 10 they have provided. Out of 10, you say for example construction contracts. In case of accounting standard, okay, there are two methods. One is completion method and one is percentage completion method. Okay. The assessee can, I mean, the entity can take any one method, okay, which is more appropriate, and they can go ahead. In case of Ind AS, if you come to Ind AS, suppose some company for which Ind AS is applicable, then as per Ind AS accounting standard, for construction contracts, it says only completion method. There is no question of percentage completion method. Okay. But that is the reason income tax department says, see, whatever procedure you want to follow for your books of accounts, we are not bothered, but we want only percentage of completion method and how it has to be computed, what has to be included, what has to be excluded, that they have given in ICDS. Okay. So this is one example which I am saying. So different ICDS are given in order to to match the Income Tax Act. Okay, so we have to follow these standards also while preparing we have to keep in mind. Okay, these things we have to keep in mind while we are preparing the financial statement, because we have to be ready with that kind of data also. Okay, just we have completed the final accounts, then it does not solve the purpose. You may file ROC return, but you have to parallelly file income tax return also. If you have to file income tax return, then you have to be ready with these kind of calculations also. Say suppose you have prepared your final accounts with completion method contract, okay, in the given example. Then you have, when you are coming to computation of income, then you have to calculate again percentage completion, because in income tax you have to follow that method only. Okay, so that is the reason you should have all those data available with you, so that you can comply with not only with MCA but also with income tax rules. Okay. Then tomorrow we will see accounting standards, how they are applicable, and what I have not prepared it. I will prepare it. Tomorrow's class I have kept it. Okay. What I request you, just whatever material you have, you can Google also. Okay. Just go through once what I am trying to tell you. Okay. So that tomorrow we will get into the format. format, and also we will start with first accounting standard so that it will be more useful for us to understand the format also, why we are doing that. Okay.
Yes, sir.
So can we conclude with today's class? If you have any doubts, please let me know.